Hello everyone and welcome back to Click. In today's video, we will be exploring the concept of financial management, which plays a crucial role in helping organizations achieve their goals. Financial management is all about planning, organizing, and controlling financial resources to maximize value and ensure long-term success. Let's dive into what it entails. First, let's define financial management. It refers to the planning, organizing, controlling, and monitoring of financial resources to achieve organizational goals. It involves making key decisions about capital investments, financing, and dividends to maximize the firm's value. In simple terms, financial management ensures that a company has the funds it needs, makes smart investments, and distributes profits wisely. Now, let's talk about the scope of financial management. There are four key areas. Investment decisions. This involves identifying and selecting the right investment opportunities to ensure that the company invests its resources in profitable ventures. Then, financing decisions. This is about determining the right mix of debt and equity to finance those investments. Finding the balance between borrowing and raising capital is essential for minimizing costs and risks. Now, the third one is dividend decisions. Once profits are generated, the management must decide how much to distribute to shareholders as dividends and how much to retain for reinvestment. Then there is working capital management. This focuses on managing short-term assets and liabilities to ensure that the company has enough liquidity to meet its day-to-day operations. Next, let's discuss the significance of financial management. Resource allocation. Financial management ensures that resources are allocated efficiently to maximize returns on investment. Then risk management. Identifying and managing financial risks is key to protecting the organization from potential losses. This could involve hedging, diversifying investments, or planning for uncertainties. Then profit maximization. The ultimate goal of financial management is to ensure that the firm achieves the highest possible returns, contributing to overall profitability. Then value creation. By making strategic financial decisions, financial management helps enhance shareholder value. This means focusing on long-term growth, profitability, and sustainability. In summary, financial management is essential for the success of any business, whether it's making investment decisions, managing finances, or optimizing returns. It plays a vital role in driving profitability and value creation. Effective financial management helps businesses allocate resources wisely, manage risks, and maximize their potential for success. Thank you for watching. If you found this video helpful, please like, share, and subscribe for more insights. So, see you in the next video. Bye for now.